Hall and Wilcox acknowledges the traditional custodians of the lands on which this podcast is recorded. We pay our respects to their elders, past and present, and to all First Nations people joining us today.
Hello and welcome to our Doing Business in Australia podcast. My name's Mark Dunphy and I'm a partner at Hall and Wilcox. In today's episode, we'll be discussing tax with a focus on customs compliance when companies are looking to do business in Australia. Joining me today is my colleague and fellow partner, Jackie McGrath. Jackie is a tax expert with extensive experience acting for large multinationals, small to medium enterprises, as well as individuals. So Jackie, my first question is, even if a business doesn't want to set up or establish themselves in Australia, but they do want to trade here, importing goods or services from offshore, for example, they'll need to consider customs and other requirements. I'm sure many of our listeners will be familiar with the concept of customs, but could you talk us through any particular Australian customs requirements?
Sure, thanks, Mark. So customs is one of the areas that a lot of businesses in the global market are probably familiar with. But yes, there are a couple of things, I guess, to note in Australia for businesses either wanting to set up a permanent establishment or distributor in Australia, and who'll be importing goods or services from offshore as part of that arrangement. But even if you're already an established business but are wanting to import your goods for selling into the Australian market, really both scenarios need to consider customs obligations. So just as a starting point, most goods that are brought in, there are a few exceptions like low value goods, but generally the thing to know about Australian customs requirements is that all goods being brought in must be reported to the Australian Border Force, which is the customs authority here in Australia. This isn't necessarily the same as in other countries. I know many who require businesses to have a license to import. So they actually apply to have an import license, and that gives them the ongoing approval, if you like, to bring goods in. There are certain goods here that require permits, such as dangerous goods, pharmaceuticals, technology, or defence technology. These require permits, but Australia doesn't operate an import licensing scheme, if you like, that people may be familiar with in other jurisdictions. The catch, if you like, is that even if a permit isn't required, you still need to report your goods every single time coming into Australia to customs. Now, for businesses looking to do regular trade with Australia, you'll need to set yourself up usually with a customs broker who does the reporting for you. And the reporting that I'm talking about is called an import declaration. Now, the Australian Border Force keep a record of licensed brokers, so you can look on their website and check who is licensed. Generally, businesses who are looking to do a lot of trade in Australia, a decent volume, will want to organise a broker. Of course, you can complete import declarations yourself, but they must be completed and submitted to customs before your goods arrive in Australia. Now, the import declarations serve really two purposes. Obviously, it notifies that the goods are coming in, but it also declares how much, if any, of customs duty, which is a tax, that's payable based on the value of your goods. So generally in Australia, and it's a very general statement, but our duty rate, or it's sometimes called a tariff, is between 5 and 10% of the customs value of the goods. So you pay duty, which is a tax essentially on 5 to 10% of the value. There's obvious exceptions to that, but that's really just to give you an idea. I guess the other thing that might be different, or things for businesses to keep in mind with trade to Australia, there are certain tariff concessions that can reduce customs duty to zero in some cases. There's a few reasons why you might get a concession, so you won't need to pay or may be entitled to a reduction in tax. The most common one is that Australia has entered, as you're no doubt aware, into a number of free trade agreements with different trading partners with Australia. So businesses looking to market their goods in Australia should really check that they're applying any exemptions or duty savings that are usually key parts of free trade agreements. But there are other reasons too. So if your goods are not produced or manufactured in Australia, you may be entitled to apply for a duty concession on that basis too. So I guess to sum up, the key things to keep in mind about Australian customs and trade is that there isn't an overarching import licensing system. You need to consider permits for every import, and you need to set up to report customs for every single item that comes across the border.
Thanks, Jackie. So if there's a free trade agreement, then there would be no duty payable, I gather. And then you mentioned the duty could range between 5 and 10%. How is it determined? It strikes me as odd that there's different amounts might be payable for different products. How is that determined, and who makes that determination, and how?
Yeah, the Tariff Act, the Customs Tariff Act, has amazing, voluminous annexures to it that itemise every single possible good that can come across the border down to a tremendous amount of granularity, and each applies a certain tariff to each, a certain percentage. So a lot, as I said, are duty-free, but a lot but still an amount has 5 to 10% on them.
Okay. What are the current trends or recent Australian customs issues perhaps that businesses should be aware of wanting to import into Australia?
I guess perhaps similar to many customs regulators, the Australian Border Force is having to grapple with very complex supply chains, balancing the need to protect Australian industry, but encouraging competition at the same time. Obviously, the volatility in supply chain security and technology, these are all things putting a lot of pressure on the regulators, but these aren't necessarily unique to Australia. But I think these issues probably inform, to an extent, when looking at the focus for Border Force, what their focus is now and in the near future. I had a look at the annual report published by the Australian Border Force to the end of June 2022, which is the most recent one. But the ABF collected about $138 million of additional duty as a result of voluntary disclosures from importers disclosing errors in their reporting, and that's about a jump of 45% from the year before. So the ABF have said that they've increased the use of real-time assessments while goods are still being held at the border or in transit. So I think, what's this really telling us? I think that there can be a number of reasons driving the significant uptick in customs activity for underpaid duties. I think things like making sure you or your customs broker are assigning the correct tariff that we talked about before when you code the goods. A tariff code is the unique number that describes the good, and that number is also linked to the duty rate, which is in those schedules that I talked about before. So some goods, depending on the unique code, could be 0, it could be 10, it could be 5. So it's imperative that it's right. The other area that the Australian regulator is looking quite closely at, and where problems arise with underpaid duty, is where the customs value on the input deck is incorrect. So again, businesses need to get professional advice about how to value the goods, because there is a very specific method for valuations for Australian customs purposes, and it's not necessarily just the price on the invoice.
The concept of valuation is a really interesting one, and it's largely, it seems from what you've said, it's up to the broker or the importer to determine the value and then declare it. I'm interested to know what the regime is for the checks and balances in place. And then you mentioned there was a significant payment of additional duty, I think $130 million in the last year or so. But how does that become apparent, and how is that applied? So what are the penalties?
Yeah, so there's significant penalties for the importer as well as brokers. So that's fairly unique to the Customs Act, is that penalties can be applied for false statements on the import declaration, and that can apply to both the importer, the owner of the goods, and the broker, which can be and if they use a customs broker who puts in the import deck, they can obviously be 3 different people that can all be penalised for their false statement on the import declaration. One of the things I mentioned before around the voluntary disclosures, that's when brokers or importers or owners of goods come forward voluntarily to the Border Force to report an error that they've made. Particularly for high volume importers, the problem usually arises because they've set the tariff and they're doing these in bulk, sometimes hundreds of transactions a day, hundreds of import declarations are made every day. So errors arise because you necessarily can sometimes have legacy issues with your systems assigning certain goods a certain tariff code. So I think, regularly checking and having a robust system in place to do your own checks and balances of where the business is assigning certain tariff codes to their goods. In terms of the customs valuation issue, that's another area that would be contributing to the voluntary disclosures and hence the increase. There's a lot of information sharing going on between regulators, so the ATO as well as the Border Force share information. So a lot of the time, where multinationals, as part of their business, are transacting in goods and services to related parties, the ATO wants to be satisfied that those prices are at market rates. And that can obviously differ to what the invoiced price might be for customs purposes. So if they're seeing, for example, an invoice coming in relation to the import declaration, the amount assigned to the goods or services for the import declaration purposes is quite low because, as I mentioned before, the tariff is applied to these goods. If it's set very low, it might be quite a different statement being made to the ATO. So they do a lot of information sharing, and for that reason, you do need to get it absolutely right.
And can I assume that if there is an underestimation made and a further payment needs to be made, either by virtue of a voluntary disclosure or otherwise, there's more to it than just the difference between what you should have paid and what you did paid. There must be a penalty regime of some sort.
There's the penalty rates if there is a shortfall in duty in the tax payable, then the penalty can be an increase to the duty. Obviously, the underpaid duty needs to be paid, but the penalty can be by reference to that. Or if there was no duty payable, but still a false statement. So again, it might be that your goods under the tariff have zero applied, but there's still necessarily a false statement, then it's by reference to the Commonwealth Penalty Unit, which I think is about $500 at the moment. But it will be for corporations importing, it will be oftentimes, 10 times that amount for each declaration that's made.
And are they civil penalties or can they be criminal penalties in the most flagrant of situations?
They can be both, absolutely right. It can be criminal sanctions as well.
Excellent. Okay, well, if I was a business thinking about trading goods into Australia for the first time, what should be my focus from a customs perspective?
There's a few things. The first, do a check for, depending on the goods, have a check of any permits that are required. The ABF, the Border Force's website, is a really good resource of what permits are needed, depending on the business. So definitely have a look at that. Second, assuming you are importing, obviously making sure that you're declaring the goods using the right tariffs, etc. And I think third, and I think this is really critical for businesses doing, or anticipating to do repeat trade into Australia, that regardless of whether the goods are dutiable, as I mentioned before, there are a few reasons why you might not need to pay duty, but you will need to report the value of the goods, and errors in the import declarations and the valuations are resulting in quite significant penalties being issued by Border Force for false statements. And as I mentioned before, obviously the importers are taking heed of that and making voluntary disclosures. So there has been a significant uptick in recovery from the voluntary disclosures. So really a key takeaway is for Australian customs purposes, making sure you obtain advice about valuation of your goods. It's critical. It's not a set and forget type thing. It needs to be monitored by the business. As I mentioned, the customs value of the goods is not just as simple as looking at the invoice and telling the Australian authority about that amount.
So it sounds like a lot of the issues that can arise, Jackie, relate to the customs valuation of goods. Do you have any recommendations about what businesses can do to mitigate the risks involved in falling short of undervaluing or, in fact, overvaluing and just not valuing correctly?
Yeah, I think even for many businesses who are already importing goods into Australia, I really think doing sample checking of your declarations, doing a health check of sorts, I think that's really important. Obtaining advice about the particular customs valuation rules in Australia. But I think that advice really hinges on having a very good understanding of your supply chain and the goods themselves. The Australian Border Force also have options for businesses obtaining preemptive customs valuation approval. It's called valuation advices, and information is on their website about that process. But basically, businesses can put together a request for a valuation advice. The application gives the information about the goods themselves, what the business thinks the value of the goods are, and then all the different integers that make up that value. For example, if you need to pay royalties or whatever it might be, but you put that all in a package and ask the ABF to essentially agree on the customs value ahead of time. From the time of registering an application until a decision is made by the ABF, the business has protection from penalties. So that's a very significant issue that I think is worthy of consideration, and of course affords a fair bit of protection.
It sounds like then, Jackie, that the Australian Border Force have a very significant role to play with regard to this regime. That begs the question for me, who's naive in these matters. They must be very well resourced, or alternatively, there must be some pretty significant delays involved in some of these functions being carried out.
Yeah, well, I think certainly we're seeing a lot more activity from the regulator, I think post the pandemic, especially because obviously a lot of importing was slowed down, a lot of business, the market was slowed, and hence there wasn't as much coming across the border for that reason. Obviously, as a lot of regulators are making up for that almost amnesty period, if you like. So we are seeing a lot more compliance resources being dedicated to it. Obviously, with the tax side of things, the tax side of customs or border force, they're seeing a lot of revenue being generated from their compliance activities. So it is making a really tangible difference. I mean, even the voluntary disclosures, so that's importers coming forward outside of their compliance activities. So we're seeing, has generated, $138 million worth of revenue. That's outside of their compliance activities. So, I think that's, they see the value both in terms of their focus. They're seeing that it's having an impact on importers' behaviours and really working with the market to obviously encourage voluntary disclosures rather than having to dedicate a whole lot of compliance resources to doing checks and balances themselves.
Well, Jackie, thank you very much. That's been a terrific introduction and overview on the Australian customs regime and the role of the Border Force and some of the issues that arise. To you, the listeners, I want to thank you for listening to today's episode. If you have any questions, please feel free to get in touch with us. You can find our details on our website, or you can connect with us on LinkedIn. If you're interested in learning more about taxation in Australia, Hall & Wilcox also has a tax-focused podcast called Tax Records, which we'll include in a link in the show notes for this episode. If you enjoyed today's episode, please rate, review, and follow our podcast wherever you listen to podcasts. Thanks very much.
This podcast is not legal advice and should not be relied upon as such. You should always obtain legal advice about your specific circumstances.